The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the January 23rd terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. You know, you're only as strong as your weakest link. You're only as strong as your weakest link. And our man Al in the production center, I think it was last week or the week before, he gave me great empowering beliefs that each of us need to use. So these are brought to us by Alberto. And it goes like this. It says, watch your thoughts, for they become words. Watch your words, for they become actions. Watch your actions, for they become habits. Watch your habits, for they become your character. And finally, and most importantly, watch your character, for it becomes your destiny. Those are beautiful words, Alberto. Let's go check out the destiny of the markets here. Right now, we've got the Dow trading off 157 points. It's trading out at 16,215. S&P down 16 points. It's trading at 1828. Composite down 39 points, trading out at 4203. Russell 2000 up 10 points, trading out at 1170. Apple down 255 right now, trading at 548. Microsoft back 21 cents at 35.72. Google off $8 and change. Cisco down 33 cents. Leading the charge to the upside is Netflix, trading out at $3.90. That's up $56 out there. Silicom Limited, SILC, that's up 26%. Is that an IPO? What is that? Let's see here. No, they're out with numbers out here. Net income $6.8 million versus $3.4. That's a double. That is 100% improvement on their net income. Let's see what they did here. If I can find the revenues, $25 million in revenues versus 16. That's a stock to be looking at. SICLC. SILC. I'll get that. Smooth as silk out there. UNP, United Pacific Corp, that's up 3.5%, up $5 and change. Gatix Corp, GMT, up $5.60. F5 Networks, FFIV, up $6. Herbalife to the downside, down $9. Priceline off $9, trading out at $12.04. Google off $8. Arctic Cat, ACAT, down 15%. That's trading out at 45.67. Let me see what they show here. They've got net sales of $225 million versus $218. Not too bad there. Their profit, where's their profit numbers? Not showing up here quickly on my screen, so we'll just pass that. You've got Chipotle. That's trading down about 1%, not a big deal, off $7, 508.60. Our call number is 877-927-6648. Give me a call, folks. Would be happy to take a look at your stock chart. So where are we going to begin here? Boy, we got things moving all over the place. So the first thing you want to know is, hey, where are the markets headed to? Well, let's just come back and take a look at the ES Mini. That's going to be the easiest one here to project and see where we're at right now. We're trading at 1822. We know that the ES Mini has been trading in a 14-point consolidation range. That's this little black box. This is a black box. This is Stevie's black box. This is your black box, your consolidation. So the projection here is about 1815. So far, the intercession low is 1821.50. So we've got another about 6 points to the downside. Let's take a look at what else we have at that range. Let's take a look at retracements off this little butterfly pattern out here off of the hammer candle that was formed at about 6:30 at about 4:30 in the afternoon on January the 13th out here. So if we go from that low to the high that was put in here, the swing point high that I'm looking at on the 30-minute chart takes us to the 11:30 a.m. time frame, January 15th. That price level of 1845.75. You can see right now Maybe you can't see because you're not watching us on Tiger TV, so I'll describe what I am looking at. And you can always catch the archive of this show on Channel 10. The .618 retracement, 1823.25. We are trading at 1822.75 as we speak. The 1815 level takes us right down to the .786 area. I suspect, irrespective of some other type of turn here, I suspect that that's where the ES Mini wants to trade to. And I'll say at a minimum. The reason I say at a minimum is this. Because a consolidation, a measured move of a consolidation, the minimum move is equal to or greater than the actual consolidation pattern. But that should be our first target area, right around the 1815, 1817 type level out there. Now, if the damage is worse than that, and it breaks that hammer candle 1809.40, that is a whole different game plan out there. And we'll have to just take a look at things one moment at a time. But it does look to me like we will see lower prices here in the ES Mini. Let's go take a look at the NASDAQ. The NASDAQ has been the strong hands. It broke back inside the consolidation pattern here this morning. It did that at about 9 a.m. That has its sights now set at the bottom of the consolidation pattern. Now, if that does not hold, you'll then see the NASDAQ really lead the market down. This has been traveling in a 30-point consolidation. Now, it did not complete the 30-point consolidation move to the upside. That would have taken us to about the 36.45 type level. So, as far as bulls or bears, with the NASDAQ being the strong hands here, I say this is what we want to be paying attention to, even more so than the ES Mini. But watching them both at the same time, that will be helpful. So the bottom of the consolidation right now, inside of the NASDAQ futures, inside the NQ, is 35.79.50 or 35.85 right now. So you've got about $6. That should be no problem to work its way down there. You're coming in with these wide-ranging bars. If that area fails, the consolidation level, you should see a move, and we're certainly getting into that extremely oversold territory on the 30-minute chart. Doesn't mean that it can't move lower here, but the minimum move, if it breaks that consolidation, I would expect to see the 1 to 2.618A to B equals CD pattern. That would take it to about 35.63. The problem is once it breaks 30 what's that number here? I'm sorry, I gave you I should have written it down, 35.79.50. I say once it breaks. If it breaks 35.79.50, that can set up a cascade all the way down to 35.50 out there, and that will put a world of hurt inside the other indexes, the Dow, especially since it is the week. Well, yeah, actually, you know what? It's pretty even, Steven, across the board. You've got the Dow, S&P, NASDAQ Composite, Russell 2000. They're all down close to 1%. Russell 2000 is a little bit stronger than the Dow out there. So that's an intra-session, intraday, where the futures are headed to. Let's take a moment here because we cannot overlook the Euro-Japanese yen. We've got to be paying attention to the real fuel in the fire here, and at this stage, the Euro-Japanese yen is trying to fend off its selling. Now, this thing broke out at about 3 o'clock this morning down at a price level 146.29, so we want to keep our eyes, and you need 3 of them. It looks like this morning. You got to have 3 eyes. You got to have one on the ES Mini. You've got to have another on the NASDAQ futures. And, of course, you got to have that most important third eye, and that's got to be on the Euro-Japanese yen. We got to be paying attention to what this is doing, because if this is not breaking down, we start to get a divergence between the direction of the Euro-Japanese yen and the markets. It will be the Euro-Japanese yen that will win the battle. We haven't seen a bullish candle here yet, just a green candle, and that means nothing more than where it opened and where it is trading at the moment. But we do want to keep that. I'll be your third eye. How about that? You keep your other 2 eyes on those other 2 charts. I'll be your third eye to pay attention to the Euro-Japanese yen. What else are we going to be taking a look at today? Just a little bit of everything. Of course, you can always give us a call at 877-927-6648. We do take a look here at Goldilocks. Oh, man, look at this, folks. Gold is breaking through, just cracking through that blue trend line. That blue trend line takes you back. You might say, I hear somebody saying, hey, Steve, how far back does that take you? It takes you back into November of 2012 out there. last time that we hit that trend line. If you take a look at January 22nd, 2013, we hit that trend line as well. That is an important trend line, and we are seeing price move above it just slightly, albeit just slightly. We're trading at 1263. I think in the earlier show, I had mentioned that what we actually could be seeing here is a very large A to B equals CD up. January 19th, just three trading sessions ago, we saw a high of 1262, 31,000 contracts. So far today, 141,000 contracts. Is that right? Is that right? Well, even if that was wrong, we'll use the 112,000 contracts from January 21st out here. It's the continuous I've got up on my screen here, and we are already at 141. Guess what, folks? We now have, assuming that price closes above the 1262, we now have a confirmed A to B equals CD up. Now, there's a couple that you could draw in here. Let me see. But that's the one. That is the one. That is the one. That means this morning's low was your C point of the A to B equals C to D on the way up. That says 1333, 1361. The 1 to 1.618, A to B equals CD. That should be where price ought to travel to. That'll take you back into that little swing point from October 28th, 2013. That high was 1361.80 out there. So it looks like that is, in fact, where Goldilocks will travel to as long as it closes above 1262. You're 1263.30 right now. Now, you got the U.S. dollar index. Hey, we didn't take a look at that. Let's go take a look at the U.S. dollar index here. Right now, that is trading down, about 595 pips, 59 cents. It's trading out at $80.70. Where is the U.S. dollar? I know I've got it on this chart out here, or my charts. There we go. U.S. dollar index. Let's go see what it is doing here this morning. Boy, talk about wide-ranging bars to the downside. Here is the daily chart. So you have the U.S. dollar index. It made a 100% move of a move. Boy, this thing has really been consolidating sideways. A 100% move of a move took place a couple of days ago as it made its way up. It didn't get to test the entire high of November 8th. That high was $81.58. It did get up, but it was inside the swing point. So this had formed a 0.786 Gartley buy pattern. It completed that pattern on December 18th, Uncle Ben Bernanke Day. And yes, I will take a look at Microsoft. And in fact, I think a couple folks in the den might have asked me to look at some things, and I didn't see them. Time has gone by, and I've been multitasking, trading while I've been working. And so if you did ask me to look at something, please retype that into the den for me, and I'll be happy to do that here during this morning's show. Now, if we take a look at the U.S. dollar index, it formed that little Gartley buy pattern. Now, the ultimate outcome of any Gartley buy or sell pattern is that turns into a new A to B equals CD on the way up. And I'm not going to discount, I'm not going to say that it can't still do that out here. You've got a big pullback here inside of the U.S. dollar index. Of course, that is being fed by the pound, by the euro, by the Japanese yen out here. So everything moving in concert against the U.S. dollar index. But what we can also really see inside the U.S. dollar index is a fairly large consolidation pattern out here that's really been in play since about September of 2013. So that is a sideways consolidation box that is out there, but certainly moving back contract-wise today, 17,000 contracts on the way back into a swing point that only has 13,000 contracts. Right now, we've got the Dow off 145, S&P down 15. We will be right back.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
149 right now, trading out at 16,224. The S&P is off about 16 points. It's trading at 1829. Do you believe in coincidences? Well, whether you do or you don't, I had to just smile earlier this morning. I very rarely do I talk about the trades that we are in the newsletter. And so I'm not really going to right now. I'm just going to do it in kind of a general sense out here. But one of the trades that we got into several trades on December 26th, December 31st out there. You know, when the cat was away, the mice will play. Well, my subscribers and I, you know, we were like little mice. We were looking for some pearls and opportunities out there. And one of the trades that we're in, it's up about 47%, 50%, we'll just call it right now, since that December 31st time frame. Now, I had adjusted, and when I get into a trade, look, I don't ask you to do anything that I don't do. And so if you've ever subscribed to my newsletter service, you know there's a detailed analysis of why we're going to get in, where our entry is, what our stops are, where our exits are. So we got both sides of the trade covered. You know, sometimes something might spike up to your area and actually get hit or what have you. In this case here, I went ahead and adjusted our exit price on one of these equities down to $1.47. Now, one of the things that I do before I go on to the air, I try to do it before my newsletter service goes out, Mastering Probability, but that's usually out by about 8 o'clock in the morning, so not a ton of activity to really be paying attention to. But we had adjusted our target exit yesterday of $1.47. pulled it back just a little bit. I do believe over the long haul it will move higher, so I gave people the opportunity to manage this trade. What made me smile this morning was, and I got a couple of emails from clients yesterday asking about the 147 area and why I came up with it. And I think that they went ahead and they took my action. And in fact, I think they took the action. They had the $1.47 in there in the pre-market, because I saw two trades fire off this morning where they got hit. Now, that was quite a jump because this morning it was like at about $1.20 something or what have you. And so I just had to smile. I mean, because it'd be coincidence that somebody else got the $1.47 and wasn't one of my clients in the pre-market. I don't think so, So, hey, folks, if you hadn't had a chance to check out Mastering Probability, the Rhodes Momentum Indicator, I teach folks how to use that. I have taught people really since I did the workshop a little over a month ago, December 19th, to be exact out there. We got into a nice trade yesterday. That's already up about 10% or so. In any event, I don't want to jinx the trades. I don't believe in that. Look, I can't control the markets. I can only control what it is that we do out there. In any event, as far as not coincidental, not only want to talk about the markets, and I do too, but, because I like helping you make money, but what I actually like doing more is actually helping to improve your life health-wise. And so I don't believe in coincidences. And yesterday, I don't know if you've caught the new show that Tom and Allie Ford have done. It's called Mindful Living. Look, if you have not caught that show, the archive is on channel, how did I miss that? I think it's channel 6. Al, correct me if I'm, channel 6, okay. So it's on Channel 6 on Tiger TV. So if you've not heard that show, I want you to make this a must, okay? And that must is I want you to go listen to that show. Download it in your iTunes, whatever it is, but go listen to yesterday's show out there. Number one, and so I don't believe in coincidences. I've been taking a shot of wheatgrass basically every day since 2004, 2005. I don't remember exactly when. Now, I was turned on to wheatgrass by a book that was put out by Ann Wigmore. This was put out in the 50s. It's called the Wheatgrass Book. You can go online. You can find it for like about $11 or so. And she has a institute. It's in Puerto Rico, so it's still there. It's called the Hippocrates Institute or organization. And last night, during one of the folks that Allie and Tom were interviewing, this individual happened to mention that he just went to a couple-week retreat at the Hippocrates Institute. Now, look, folks, wheatgrass tastes nasty. Some people like it. I think it tastes nasty as can be. So let me tell you a couple tricks on how you actually get past that. Number one, what I do is I mix it with one full shot of ginger. So usually I'll do 2 shots of wheatgrass and 1 shot of ginger. A full shot of ginger, folks. That'll spice things up in your life. It's good for you. It'll kind of get rid of that taste. But if that doesn't work, just take a little fingerful of peanut butter, shove that in your mouth, and you won't be tasting any grass. You'll just be tasting that peanut butter out there. Others have other ways of doing it, but I've been doing it so long that the wheatgrass for me is pretty nasty, even though you can kind of make it sweet. But look, it is something that will improve your health. Now, there was another segment that they did on prostate cancer, and it was using an ultrasound machine out there. I think the guy's name was Wheeler, Dr. Wheeler, if I'm not mistaken. Look, last night's show is absolutely worth listening to, way more than anything that I can tell you about the markets out here. You might be able to help not just your life, but maybe somebody else. And thank goodness for Tom and Allie Ford for putting that show together. Please go listen to the archive on Channel 6. And that is Mindful Living. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow is trading off 154 right now. S&P is down 17, and had a couple of requests. One was to take a look at Fusion IO. FIO is the ticker symbol out here. Gapping up this morning, doing it, I think, with some pretty decent, I know it was with some pretty decent volume. I've got the Rhodes Momentum Indicator strategy up on my system. Actually gave a little buy signal out here. Let me actually get my crosshair cursor to make it a little bit easier for me. Gave us a little buy signal. Gave us a buy signal on January 15th, actually gave you an entry point, suggested to come in on January 16th. Now, this thing has been hammered. We're going to take a look at a different stock chart out here. But it is one that what we want to see is we want to see some buying pressure continue inside of this equity. You'll see when we switch over to another chart what it is that I'm talking about. Now, this had several types of gaps to the downside. Now, Fusion IO, as I pull this back here, we'll take a look at this. It was a IPO that takes you back into about June of 2011, and FIO, Fusion IO, what these folks do Give me a moment here to pull it up on my screen here. They sell, they develop, they market memory platforms in the U.S. So that's in essence what they do. Now, if there have been a few signs of strength, here trying to come off of the bottom. The last one that took place. This took place here on October 28th. Now, I would say this sign of strength has a signature that's better than the last one, because the last one was after we saw a gap down on October 24th with 29 million shares out there. In this case here, we haven't seen any other type of selling pressure to the downside. Now, because it also is at its all-time lows, or was at its all-time lows back on January 13th at about $8.32 out here. There's really nothing to go back against to see what it's doing. It does not look like it was a three-gap play to the downside out here. This last gap looks to be about just as large, and so certainly percentage-wise, it's not going to be a larger percentage than the gap that took place to the downside on August 8th. So these guys have some problems. However, you are seeing a nice sign of strength. We saw a little sign of strength yesterday, quite frankly. So yesterday was the first one, 6.5 million shares, kind of as if somebody might have known what was going on. Let's see, they had a loss here for their second quarter of 21 million versus a profit from the prior second quarter of 1.7 million. So that's pretty big. But obviously they're good at spending money out here. They did revenues of 94 million versus 120. So you can see that's they must be. You'd want to really look into it. I would say go read the 10Q. And, that's what I would do. If you've never read one, then this would be a good one. Go to the Management Discussion Analysis, the MD&A section, and try and read through that, because there they'll give you correlations between what was going on this quarter versus last quarter. They really need to do a pretty good job of providing information inside of their filing. And it should be available today. It should be available out there right now, so you can go through if you're really taking a look at trying to take a play on this one. As far as the advice, whether this will pull back a bit, could come back. Ideally, you'd see the sign of strength. You'd see it come back and test with light volume, and then maybe off to the races out here. But we are seeing a little bit of a shift in momentum, and the reason we want to pay attention to that. Now, this is not like this is not going to be exactly similar, but the reason is that here, if I put up the stock chart for Hewlett Packard HPQ as an example. Now, HPQ, a whole different ball of wax out there. By the way, this is the daily chart, and it shows a little price relative strength, potential divergence pattern, which has not set up here just yet. But as Hewlett-Packard was coming off of its lows out here back in October of 2013, first it formed a nice little hammer candle out there. That was not the buy signal, but you got a buy signal, buy mode, the whole kit and caboodle that took place on the very next trading session, October 9th. That closed out at about $22.58. You're right now at $29.37 out here. And that's true. That also was taking place after a big gap down with some volume out here. So trends can change. That was not the first time that Hewlett-Packard made it off the bottom. I'd have to go back even further in the chart. So it is just something to be paying attention to. In any event, that is on Fusion.io out there. I hope that helps our listener. Also, I had a request to take a look at Microsoft. MSFT is the ticker symbol. As we take a look at Microsoft right now, trading out at $35.77. My recollection is this is really trading in a nice big consolidation. I don't see that. It's really been in a sell mode as a part of the consolidation to send it back towards the bottom. This has had nothing but really sellers inside of this equity since that time frame. By the way, that time frame took place on December 12th, 2013. It opened at about 37.66 or so. Right now, you're trading at about 35.75. Out here, that's on the daily. I've got a little tool that I've got out here when I take a look at equities. I like to understand what's going on at the at different levels. So if I put Microsoft up here, the top portion of the chart is going to be the weekly chart, the weekly trend. So it really helps to you to understand where you're at in trading, what time frame it is that you're looking at. And so these are types of charts that show up in my newsletter service, Mastering Probability Each Day. You can see inside Microsoft, it gave us a nice big weekly bearish engulfing candle. That was during, let me get this cursor out here. That was during the trading session of the week of December 13th out there. That actually set us on the weekly chart into a little bit of a cautionary zone. I don't like necessarily what I'm seeing here right now on the weekly chart. It's really just confirming the daily's buy signal out here. Let's take a look at the actual consolidation pattern. It should show up on my core stocks. If we go take a look at those and we take a look at the core stocks inside of Microsoft. So the next potential buy in Microsoft, MSFT, would be at the bottom of that consolidation. Let me see here. Oh, it broke an original consolidation. That's what it did. So it made its move. Looks like it completed. So now that I pull this back a little bit further, did it complete its full move of 4 points? No, it didn't complete its full move to the upside. So right now what Microsoft is doing here, it's coming back, and it looks like it'll test the top of this consolidation pattern, which would be the July 18th candle session that we're looking at, and that was where we saw a gap down, the bottom of which is 35.22. So that looks like where Microsoft will head to about 35.22, maybe even try to poke its head into the top of that consolidation, because there's a swing point at January 14th that had 41 million shares. You're testing that as we speak right now. So far today in trading, and we've been trading for an hour and 10 minutes, it has done 8.5 million shares. So it is pulling. If this volume pace were to keep up, it's pulling into that session with some volume. I don't know if the volume pace will keep up or not for the day out here, but it is inside the high of that candle session, 35.88. Your 35.73 says that 34.63 should be tested. Of course, you're going to want to then see it actually get back above the top of this little consolidating pattern out here. That is on the daily chart out there. That's that small consolidation that it broke. If it closes below 34.63, Microsoft ought to run all the way back down to the bottom of the consolidation, right at around the price level. I would say the target would be about 31.02. So that is on Microsoft out there. I think that covers the request, but I will take more requests, or you can give me a call to 877-927-6648. Let's go take a look at some of these stocks here that are popping and dropping in the market. Let's take a look at Netflix. Carl Icahn here has an interesting funding program for one of his sons, and I'm sure Carl's also an owner of one of these of this exact same fund. I don't recall the name off of the top of my head, but it was his son, supposedly, that got Carl into both Netflix, NFLX, as well as the Apple trade out there. And I would have to say that his son did a pretty good job on that. And Carl sold out on the trading session here of October 20. Now, he didn't sell out. He sold half of his interest. I believe he owned about 9 million. He had a 9% interest, maybe like about 5 million shares. He sold like about 2.5 million shares or somewhere. And he sold it during that entire trading session of October 22nd. Now, he made about $800 million on that deal. However, his son did not want him to sell. His son did not want him to sell. He said, hey, that's not the top inside Netflix. So they made a bet. There's actual filings out there. If you go take a look at the 10Q filings, you can find this. And so there's an actual filing that was done to describe this transaction. Now, when I saw the transaction, I thought to myself, I wonder if this is actually a way for them to be able to get money, because you see, if you were to gift the money as a gift, you would have to pay gift tax on it. But because this is some type of hedged type of a transaction, you can call it a bet, you can call it what it is. But because all the paperwork, I'm thinking he's got some pretty smart tax accountants out there, and this could turn, because this deal runs until 2016. I can't recall the exact date, but this could turn out to be, because he's got to make up the difference. So if you take a look at this kind of derivative transaction here, it's about 2.5 million shares. And right now, I think as of last night, it's worth about, where it's priced at right now, it's worth about a couple $100 million, if I'm not mistaken. I think it's about 175 to 200 million or so. But the transaction's a little bit complicated. But my guess is that this was one way for Carl to actually be able to get funds into an account that his son controls without actually having to pay gift tax. Now, if you're an IRS agent and you're looking at it, you might want to go take a look at that. I may have just tipped the cart out there, but nobody else had reported on it. But that was actually one of the first things that I had thought about out there was this a innovative way to transfer funds that Carl owned out there? Pretty interesting. In any event, right now, this is doing is trading up above its swing point from December 24th, doing it with volume. That could be the next A to B equals CD. The volume on that swing point, 796,000 shares. We've already done 6.8 million shares, so it's got some pretty nice volume in it. That is on Netflix. Now, Netflix gave us a nice Rhodes momentum indicator signal. This was after it getting trashed out here, down back, it made a high back in July of 2011. It went ahead and they went ahead and changed their model out there, and that stock took a big hit inside of the market. But now it is a hit to the upside. In fact, I have not used Netflix, but I installed a device to consider even using Netflix myself here yesterday. Maybe that means the top is in. Maybe Carl's son ought to take his money off the table here right now, because I had never gone into a Chipotle either, and I had put in the top in Chipotle after visiting it. I went ahead and visited twice. The very first time I visited, I was like, are you kidding? First, I couldn't understand how a fast food restaurant was priced in the what was it? It was back here in 2012. How it was priced in the $400 range out here. Of course, right now it's at $508 inside of the marketplace. But it was after I went in there a couple times and reported it here on the air, and I said, I don't see it. That food, I do not see it. Of course, I'm not the one that caused it, but for this thing to pull back, but certainly that got sold off, and I do believe Basil Chapman. After I went in there, I was looking for a short entry, and had written about it in my newsletter service. Now Tom knows, because he was traveling, that several subscribers actually took the short trade before the target. I was looking for Chipotle to get back to the high from June 27th out there. That was at $414.99. Unfortunately for me, the high came in the day prior to its earnings, July 19th. I remember I was driving in the car. It was after the market had closed, listening in, of course, to none other than the Tom O'Brien show, to only find out that, I was worried about a few bucks, and this thing had gapped down by $100 or what have you, right? It closed the session out on July 19th out at 403.86, and the next day traded down to 301 out there. And but every now and then you got to trade what you see, right? I mean, that is the best advice. That is the best advice I could ever give anyone, is trade what you see. Well, right now we take a look at Chipotle here. If we trade what it is that we see, it's trading down into, this thing broke out. Did it with some nice volume here on October 18th, 2.5 million shares. It's trading into that breakout session. So far today, it has done 172,000 shares. So it's pulling back on some light volume out here. If it closes inside this candle from October 18th, what you'd want to be watching for is the bottom of the gap. Not because the gap will get filled out here, because you want to take a look at that gap as a potential first place for finding support. And that is at the 477.34 level out there. So about another $35 or so inside of Chipotle, pulling back into a breakout session with light volume. It's also going against its most recent swing point that had 327,000 shares. It is testing that here today, and that low is 506.44. So far today's low has been 506.20, so we've seen a rejection of that swing point, but I would have to say it's coming in there with volume, because that had 327, and you have already done 173,000 contracts out there. If we take a look at the ETF structures, we ought to do that. We ought to go take a look at the Qs, and so we'll take a look at more of that when we get back from this first breakout here. But so far, not first break, our third break of the morning. So far, volume in the Qs to the downside. 12 million shares. And all the Qs are trying to do is test the last sign of strength out here. And that was on January 15th. That had 39 million shares. Again, so far down with 12 million shares. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow is off 182 right now. S&P is down 19. NASDAQ off 42 points. Russell 2000 off 10. Goldilocks, so off to the races. It's trading up at $12.62 out here. It's up $24. Silver is up 36 cents. It's trading at $20.20 out there. Light sweet crude up 55 cents. We were taking a look at the Qs here. or I wanted to begin taking a look at the ETFs for you, try to cover that. Right now we're seeing the Qs here pull back. Now the Qs have, today I had projected that today would form the next three drive to a top pattern. Looks like I was off by a day. And, when I saw yesterday's Doji come in and getting pretty close to the target price of $89.42, actual yesterday's high was $89. I mean, that's pretty darn close, right? And that formed, you can see, really a perfect symmetrical three drive to a top pattern out here. Now, what we're seeing with regard to the market, we've been trading for an hour and 25 minutes. You've got 12 million shares to the downside. If this pace were to keep up, maybe you're around 65 to 70 million, which would be pretty big. That would be a big number. If it keeps up that pace, though, that actually presents a buying opportunity. Yeah, believe it or not, it presents a buying opportunity. You go back, folks, you take a look at your Qs chart, and you go identify every high-volume low out there. And what you're going to find is those high-volume lows in the Qs typically represent lows. Now, sometimes it's within a day or two, and that was the case back in June. June 20th was the high-volume bar. You saw it move just a tad lower for a couple of days out there. But high-volume bars are the downside in the Qs, actually, especially one big swoop like that. And in this case here right now, it's trying to come into an area of support. And that support, really, there are two levels of support out here. The first was at the bottom of the gap, the January 15th low, and the second level of support was the high of January 14th, 87.72 out here. Now, if it rejects 87.72, if it gets inside there, even if it's with big volume, well, guess what? You can probably forget about the three drive to a top pattern because it certainly won't be symmetrical out there, and you'll actually have the Qs that can take off topside out here. Yes, you heard me say topside. Now, let's take a look at the diamonds. That's been the weak link out here, right? It's been the Dow. Let's go see what it is doing here today. So far in its first hour and a half of trading, 3.3 million shares to the downside, taking out a swing point that's got about 11 million shares. That's January 13th, but trading right into the high volume bar on December 18th. Now, the high volume bars inside the diamonds, they don't do the same type of job that it does inside the Qs, so I'll save you that work out there. And instead, inside the diamonds, the top of that bar is 161.79. You're trading inside it right now. That has 15 million shares. You're coming into it with 3 million shares, so it's got the similar type of volume if this pace were to keep up. We'll just have to pay it. We'll just have to take a look at now, if the diamonds reject this area here today, meaning they close above 161.79, that would be a pretty powerful statement out there. But we'll just have to see if, in fact, that is what takes place. Yes, you don't see me jumping on the overall bearish bandwagon here just yet. We take a look at the IWM. IWM really completing its second three drive to a top pattern. Symmetrically, it would have taken place here today. That would have been up at 117.58. It actually got up to 117.37. I mean, come on. Price-wise, it certainly made it. Symmetrical with regard to number of days. It was off by a day. Hey, give me a break. In any event, today, 8.7 million shares to the downside out here. It's January 13th. Swing point down here has got 45 million shares, pulling back into its last little sign of strength, which was January 14th with 40 million shares, 31 million shares on January 15th. We'll see what kind of damage can be done inside of the Russell 2000, if anything. The S&P 500, the SPYs, so far moving down with volume of about 38 million shares, coming in that sign of strength with 149 million shares on January 13th. Folks, I'm sorry, but our time is up. So you have to join me tomorrow morning, but stay tuned because we got a full day of programming. Basil Chapman is up next, Larry Pesavento after that, Daryl Martin, David White, Andy Hecht, and the Tom O'Brien Show. Have a great Thursday, folks. Look forward to seeing you tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.